Hi, welcome to Algo. So I'm back after quite a long time, and there is one more thing which is back is SEBI and its circulars. Okay, so the today's topic is SEBI's recent circulars on algo trading platform, their compliance points, and how it is going to impact the algo platform providers and ultimately the retailers. So let us discuss all these points and the consequences and what can be done by the retailers. Okay. So first thing first is that understanding the SEBI circular, and there are some ambiguities into it. So let us go to SEBI circular first and understand what it says. So this is the SEBI circular, page one. It came on 2nd September. Performance return claimed by unregulated platforms offering algorithmic strategies for trading. So basically, algo strategies for trading. They had issued a circular some 3 4 months back as well, wherein they asked for a white paper and comments and feedbacks from all the stakeholders. There was a lot of deliberation at that point of time among all the players. Even on TV, there were some debates. There was a Zoom call of various people associated with it. Even Retron was part of it. I also was there in that particular webinar. So all those deliberations have happened, and I don't know what SEBI has taken from those feedbacks and how they have presented this. So basically, what they say is that it has come to notice to the SEBI that some unregulated platforms are offering algorithmic trading services strategies to investors for automated execution of trades. Such services and strategies are being marketed by claims of high returns on investment. Further, ratings have been assigned to the strategies, which could lead to investors being lured by such claims. This may amount to misleading of such information. See, there are two, three words here. One is this unregulated platforms. Uh, in my knowledge, I am not aware as of now what are the regulated platforms and what are the unregulated platforms from SEBI side. So that is one thing which we have to see and find out. Second point is the such strategies and are being marketed with claims of high returns. Yes, this is absolutely wrong if the marketing of the strategies is happening based on uh, claims of high returns and future expectation of those kind of returns to the retail traders, which is bad, which should not be there. This gives some unreasonable expectations to the retail traders, and they definitely get lured. So this point is okay. In this second point is in this regard, SEBI has cautioned investors against dealing in some unregulated platforms, algo trading services. While press release, this was the letter. Okay. It has also come to SEBI's notice that stock brokers providing algo trading facilities to investors through such platforms. Yes, the algo platforms are being provided by the stock brokers through many platforms. So that is true. Now, this is the main point where they have their point to say is that in order to prevent such acts and instances of misleading and to protect the interest of investors in the security market, it has been decided that stockbrokers who provide services relating to algorithmic trading shall not, they should not do what? Number one, directly or indirectly make any reference to the past or expected future return performance of the algo. There are two things. One is past performance, and one is future expectations, future return expectations. As far as I am concerned, there is no harm in displaying the strategy's past performance by the strategy creator or by the algo platform provider or the broker as well, because that will give the retail investors a fair idea how the strategy or any particular algo has performed in the past. At the same time, there should be a disclaimer with that the past performance is no guarantee for the future returns. Okay, so that is some gray area which should be there. Now, another thing mentioned here is expected future return. If somebody is mentioning expected future return, this is a crime for the retail investor. One should never mention that these are the future expected returns. Neither the algo platform providers, nor the strategy makers, or the brokers. Nobody should mention the future expectations because nobody is very sure what is the future expectation. There is no meaning of that. So that is literally a very bad practice which should be curbed by SEBI, by brokers or algo platform providers or by any individual as well. So this is a valid point as far as future expectation is concerned. Number two is directly or indirectly associated with platform providing any reference to the past or acha. This is about the brokers. They are mentioning that if a broker is associated directly or indirectly with such platforms providing any reference, मतलब जो अगर प्लेटफॉर्म भी इस तरह की कोई डाटा प्रोवाइड कर रहे हैं पास्ट परफॉर्मेंस का और फ्यूचर एक्सपेक्टेशन का, तो उनके साथ भी ब्रोकर्स को एसोसिएट नहीं होना है. So these are the two main points directly being mentioned to the brokers. So 4.1 is directly to the brokers. So in this case, what the brokers have to do, that they have to remove all such references from their website which provides the past performance, the historical data. Okay, if they want it to be removed, it has to be removed, but I think there is no harm in providing the past performance data with a disclaimer of not expecting the same kind of return from future. And if anybody has mentioned expected future returns, so that also has to be removed from the broker side. Okay. Number two is that the brokers should disassociate themselves from any algo platform provider who is also mentioning such kind of past performances and future expectations. Like for example, take the example of TradeTron. Now, TradeTron till now was giving a equity curve and the past performance of any algo or individual algo, so that the retail investor can come and see the past performance. Of course, TradeTron is not providing any kind of space wherein there is a mention about the future expectations. So that was right actually, but right now they have to remove this past performance as well, which they have already done today. Okay, so now as far as TradeTron side is concerned, they have removed this, and the brokers can send their expectation that their compliance to the exchange after removing from their website as well, where it is coming then that like brokers like LIS Blue, they have a section in their portal, or they have a separate portal called Trade Store. So in the Trade Store, they have given references of many algos, Algo Baba or somebody else. I'm not remembering the name, but they have tie up with many people, and they have given the references of all these algo provider. So I think they have to remove those references from their Trade Store about any algo provider platform, because those platforms themselves have to remove these past and future expectations. So to be on safer side, all the brokers have to remove the reference to algo and the algo providing platform. Page 2 is 4.2. Stockbrokers who are directly, indirectly referring to any past or expected future return performance of an algo or are associated with any platform providing reference shall remove same from their website and or disassociate themselves from the platform providing such references, as the case may be. Within 7, that's what it's the summary of the previous point 4.1, 1 and 2. And now next they have advised something to exchanges. Exchanges has been directed to ensure the compliance to these points, and that's all, nothing much. So these two are the points which has to be taken care of. as per the new circular. Now, there could be views and opinions and discussions how reasonable has been SEBI in terms of on the pretext of providing the protecting the retailers' interest is a question mark, big question mark. How the retailers are getting protection by such one-sided decisions? We have this is a topic to debate for everybody. So let's come back to our presentation again. Are SEBI's concern and actions are positive and genuine, and are they really helping the retailers and SEBI's intended purpose? See, the purpose of SEBI per se is not bad. The purpose was that the retail investors means people who come from their hard-earned money, 1 lakh, 2 lakh, 10 lakhs kind of money, and they come to the market initially for the stock investments, and then they see all these algo platforms, automatic trading and all, and the purpose was that they should not get lured or they should not get trapped into something which is bad and their money can be wiped out by. So that was the intention, but is it really helping? See, the SEBI has taken few actions. SEBI has taken few actions in last 1 or 2 years. One action was increase in the margin. Like we used to get quite a good leverage in option writing, futures everywhere, and which they have removed everything, and now the full margin is required. Has it helped the retailers? I don't think so. To some extent, yes, it has, because people who are having limited money, they cannot leverage themselves to more risky assets. Like earlier, if somebody was having even 20,000 rupees, he was able to do 2 3 loads of crude oil, okay, which is very risky basically, because if you see the crude oil contract, or for that matter nifty contracts, if you are able to do within 10 12,000 rupees, then your risk is quite high, because you are able to take a trade in a contract which is more than 5 lakhs, 6 lakhs, 20 lakhs value within 10,000. So you know how much will be the risk involved. So in that sense, it has helped. But at the same time, uh, is the retailers really so bad and so unknowledgeable that they don't understand their interest? Yes, there is a point that SEBI can create some awareness, etc., through ad campaigns and promotions for the retailers to not to participate into this kind of leverage trading. And the second decision which SEBI has taken is now about Algo. Now you see, let us take an example of TradeTron. Now TradeTron is such a platform wherein at a very cheap rate, very cheap capital investment, anybody can come and he can start making his own strategy. There is no harm. SEBI cannot prevent anybody for creating his own algo and trading. Okay. So, if such platforms are discouraged by SEBI, it is not good for the retailers. So, it is not helping the retailers. Same way, by providing the past performance, the historical performance by the strategy creator, which is a good practice. Providing some past performance does not mean that somebody is giving assurance for the future. So, like removing the previous performance also is not good. So, even keeping the previous performance by the strategy maker is helping the retailers to make their conscious decisions, the informed decision. Now, since every platform will remove these past performances, so the retailer becomes blind completely for making his decision. So anyway, SEBI is a regulator, and if some decisions has been imposed, it has to be abide to. So assuming that we have to abide to these decisions, we proceed further. Now, just to give a reference, how the percentage of people are trading in the stock market. let us say in India, it is 2.1%. So out of 140 crores of population, we will have around 3 crores people who are associated with stock market in some sense. And in US, it is 58%. So you can see the difference. The point of putting this particular slide is that should SEBI not see these points that we are only at 2.1%, and they should create an atmosphere wherein more and more people are genuinely getting interested in stock market, and they are doing trading or investment? No, they have not encouraged this thing. If you see the coming to the algo in India, the volume is quite high, 55%, but it is still higher than India in other foreign countries, especially in US, it is around 80%. Okay, so see through algo, when a retailer goes through algo or any trader goes through algo into trading, he is taking out the emotions completely. So that anyway is helping the retailers. So to discourage the algo, discouraging the algo by SEBI by putting such restrictions, etc., it is not helping the retailers. In fact, it is making them to go to manual trading again, which will again destroy their money. So it has to be seen SEBI in a very much positive perspective and should encourage the right things. Discouraging algo means asking the retailers to go on manual trading, and everybody knows there will be profit and losses in both kind of trading. But how people lose in manual trading, and how systematic it becomes through algo trading. At least we are taking the emotions out through algo trading. So that is a big plus point for the retailers. By doing or discouraging the algos, SEBI is not helping the retailers to protect their money. Instead, what SEBI can do is much better things due to which the investors suffer, like the freak trades. It was very frequent till last some time that freak trades used to happen. Your option of 200 rupees used to trade at 1942 rupees, which happened. Some people will lose money, some punters will make money. So all those manipulations were going on. So this is the prime responsibility for the SEBI or for the exchanges to put the system in place to arrest such kind of nuisances from the market, so that the retailers and the investor in general or the trader in general can be protected for his capital. These are the much more important things. Grievance redressal system can be more responsive. Yes, I know that we have the GRS in place in India, in NSE and MSCS everywhere, but their responsiveness to the problems of retailers and the investors can be more responsive, more quick, so that the trust of the retailers built uh, in the platforms or in the brokers or in the exchanges or in SEBI, right? And as I mentioned last, that they should encourage the platform provider and retailers for algo trading instead of discouraging them by putting the restrictions, one-side restrictions, creating the panic among the brokers, among the algo platform providers. They should do something in a positive manner so that there is an encouragement for the platforms and the brokers and the retailers for the algo trading, because that is the future. See, if SEBI starts playing in such a way which hampers and deteriorates the motivation towards algo trading, it is going towards bad direction only. It will slow down the growth of Indian market and the algo trading or the trading in general and the volumes as well. And they can run the risk awareness campaigns instead of putting the restrictions, putting the things which will make the people not to trade or be hesitant to use some elbows or something. Instead of that, they should like put the awareness campaigns and ads. They put so many ads in TV and all. So those ads can be converted into the awareness campaigns by NST or by SEBI with the help of brokers I don't see anything such happening on more regular basis, wherein there are regular campaigns between all these stakeholders, the companies like SEBI, exchanges, and the brokers, together doing lot of awareness and teaching programs for the retailers. No, they are just busy in making the hard rules, and one fine day, early in the morning, sending some circulars and creating the panic, which is not a healthy practice. Now, what will be the changes which will be done by the algo providing platforms? Let us take an example of TradeProne. Now, TradeProne, as I mentioned earlier, they were having the past performances, drawdowns, and so many other parameters shown publicly to a retailer or to anybody who is visiting the strategy, particular strategy. Now, SEBI wants through point 4.1 that all those past performance should be removed, which today I think TradeTone has already done. Okay, but I still feel that this will be bad for the retailers or for anybody who is not trading his own strategy, but he is dependent upon the marketplace or the other strategy. It will be bad for him because he will be not able to make any good decisions or informed decisions in absence of any historical data of the strategy. But still, since the master has told to remove, TradeProne has removed it. Limiting the my suggestion has been to TradeProne, and it has been communicated in writing as well, that yes, to abide by the compliance to be done through from SEBI circular, we can remove the historical performance, etc., from the public view. Okay, but the person who is creating the strategy, who is a strategy maker, once he click on his strategy, he should be able to see the past performance. So, in that case, the uh, algo providing platform like TradeProne is complying to the point of SEBI by not showing the past performance publicly. At the same time, the strategy maker, he has all the rights to see the past performance or the equity curve of his own strategy for his own purpose. And of course, he can in his circle then circulate that particular equity curve or the past performance to bring in his clients or to help the retailers. So this point, I think the TradeTone will take the cognizance of this point and will act on it. One more point they should do is highlight the disclaimer in the platform website. At present, I see a note well placed and highly highlighted disclaimer in TradeProne website. So they should highlight the disclaimer about and specifically give a mention that these any strategy or any past performance or anything is not a guarantee for future returns, and basically it contains huge risks. So those disclaimer has to be mentioned so that it is visible very publicly to everybody. Okay, and another point which TradeProne was doing is publishing the strategy rankings uh, in the first week of month for the previous month. I agree with this point, it should not be done. The reason is in platform like TradeProne, I can make a strategy with 5,000 rupees capital and can make it generate some 10,000. So it is generating 200% return. This strategy will find place at number one, which is not right actually, which gives a very false information to the retailers, of which SEBI is apprehensive of. So anyway, as it confirmed by the MD of TradeProne, they have stopped this also from yesterday. Another point is if you see the strategy description in trade in a I'm just taking the example of TradeProne. It is applicable to all the algo platform providers. uh, that every strategy has got a description which the strategy maker writes. So there should be a standard template to write the strategy descriptions. For example, let me show you one of my strategy on TradeProne. Like this is simple strategy, and what I have given here is what instrument does the strategy trade, what is the base logic, what is the capital requirement, and I have mentioned what will be the number of trades it may take during the day. And next point, which is most important to be mentioned, is how much could be the risk. And there's a disclaimer, and then there is other social media handles link as well. So these are the basic informations which should be put. But what is happening generally, if you see few of the strategy creator, I will not name anybody, but if you see the descriptions, you will find a complete big story. Like there will be strategy, there will be some claims of the strategy of past performances, there will be some back test data screenshots, there could be some you know, previous performances screenshot, Excel sheet screenshots, and it runs into pages. I'm not naming anybody, but it can be seen from. So this should go from there, because if SEBI has asked to remove the past performances from TradeTron, why a description of a strategy should have the same thing again in terms of screenshots, etc. It should be removed. So Retron can provide a standard template for strategy descriptions for the basic points, which helps the retailers to actually take an informed decision, like what are the instrument, what is the capital required, and what is the risk. Here the a few more things can be added, which are basic. So those are the only things which should be provided. I think I have already written to TradeTron and discussed with them. It will be done, I think. Okay. Yeah. So these were the points in terms of present SEBI circular. What are the actions to be taken by uh, brokers, by the retailers, or by the algo platform providers? If I'm asked, I'll suggest that retailers from such kind of regulations will turn to strategy maker. In fact, I always advocate that everybody, people who is to the extent is possible, he should be able to have his own logic, learn his own logic, get it coded or code himself in such platforms, or get it coded by somebody. We can help into that as always, and run his own strategy. Because if somebody is running his own strategy, say we cannot do anything in terms of disturbing him from running his strategies. So these are few things which I thought we should discuss. That's it in this particular video. If you like the content, please like the video and subscribe the channel. Share the channel as well with your friends, family members, if you feel they can be benefited from the information provided here. Also subscribe and press the bell icon so that my next videos will be intimated to you directly. Thank you very much, guys. Thanks a lot.